How do you go about investing $1,000? Guys, welcome to the Independent Investor Channel. My name is Ryan, coming to you from the Big Apple, New York City, New York. It's so good to be with you. There's so many videos online about how to invest $1,000, and I thought it prudent to give you the Independent Investor Channel's twist because I'm not like the other guys, all right? This is going to be $1,000 invested with my particular twist, all right? And I've made it very simple in a three-part breakdown. I'm going to call it the 3 A's, all right? And this is going to be a first of successive videos that I end up making on how you end up looking at money. I've done previous videos on the forms of money and how you end up looking at money in a different way, because for a lot of people, it's hard to look at $1,000 as shares of stock, okay? I talked to a colleague of mine at work today who started investing, and the first stock that she bought was Amazon. So her first $1,000 went into one share of Amazon, okay? And that can work out just fine. It really can. It was really good dialogue. I contend that there is no one investment strategy that's good for everybody, okay? But I will contend that if you abide by these 3A rules when you're looking at investing any amount of money, whether it be starting with $1,000, which meets the definition of your initial deposit, basically. Okay, so when your initial deposit goes into that account, that's going to be your starting point, or the amount of money that you start to build on. Okay, so I don't look at this $1,000 as the end all be all, that you're going to invest this $1,000 and you're going to end up a millionaire when you get older. There's going to be certain things that you're going to have to do to build upon this $1,000 to make sure that your financial goals are met in the future, guys. And one of the main things that I talk about on this account or on this channel is to choose the right account, okay? I'm hearing a lot of talk about going and getting Robinhood because you can trade free. Guys, you're saving $7, okay? You're getting onto an app that they're heavily marketing that you end up trading on margin, which is a real big no-no. That's a big faux pas in the industry. You do not need to trade on margin, all right? You get yourself in a negative situation. Now you own the margin interest, you own taxes on your lot, and you're in the negative. You're in a loss category. You don't need to do that, guys, all right? You need to get into the self-managed Roth IRA or look into the benefits of a traditional IRA. You know, you're going to pay, you're going to save on the tax up front, you know, in a traditional vehicle, and you're going to pay the tax at the effective rate, you know, when you end up retiring. I advocate all the time for the Roth, especially the self-managed Roth IRA on this particular account, because I want to make sure that the information that I'm pushing out to you guys, I want to make sure that if you have that $1,000, that hard-earned $1,000, that it's going into the right account, okay? That's why I have it number 1 here. If you take this $1,000 and you put it into the wrong account, or you put it into Robinhood and you start to enter into taxable situations, guys, you're going to be amazed at how quickly this $1,000 can be consumed, all right? You have to start in the right account. That's point number 1. Point number 2, allocation, okay? Allocation, for me, in my mind, is synonymous with diversification, okay? When you are making your allotments within your accounts, you cannot look at this $1,000, again, as being something that you put to work in a self-managed Roth IRA, and it just makes you rich overnight, okay? You really need to look at investing for the long term when you're looking at this. Starting minimum initial deposit in that account of $1,000 is just that. It's a starting amount, guys. It's a starting place, all right? And down the road, as the years start to go by, this $1,000 is going to duplicate itself over and over again. But how do we maximize allocation if we only have $1,000? Can we diversify along an entire spectrum? Can we realize true diversification with only $1,000? Guys, I contend that we can, and we can do it without single stocks in this account right away. We do it with the help of exchange-traded funds. You know, I advocate all the time for VOO, which is the Vanguard's S&P ETF. That's going to pay you a cash dividend, okay? So we can't set it up for dividend reinvestment, but it's going to set you up to pay you cash. And that's going to start this money working for you. And again, I revert back to this. The money that's being paid to you is tax-free, tax-protected, and we're in a self-managed vehicle. Nobody's charging you to make these moves for you. Okay, you keep everything yourself, all right? So allotment is one of the really most important things, is that we're starting the mindset that we're going to need to diversify, and to getting that immediate diversification with only $1,000, you can do that using ETFs, okay? Now the other option is to go ahead and opt for taking this entire $1,000 and putting it into an index fund. The index fund that I have is VIFNX. It's the Vanguard S&P index that has an expense ratio that's super low. It's 0.15. I've had a few comments about the Admiral shares in the same account. Guys, to own the Admiral shares, you need a $10,000 minimum deposit, and the fee structure drops to 0.05, which is really, really good. It's a phenomenal fund, but you have to be with Vanguard to own the Admiral shares. The VFINX is actually the index fund that I can own in my Merrill Edge account. It doesn't matter, okay? So I'm allowed to own that account. So that's allocation, all right? Allotment, okay? This is the 3 A's. This is the final A in my 3 A's perspective of how to take $1,000 and invest it my way, okay? What does allotment mean? Does it mean that we take that $1,000 and we put it away and we forget about it forever and we never manage it, or we never look at it, or we're never curious as to what it's doing? No, not at all. Now, I set up my accounts for you guys to be really, really passive, okay? I don't advocate that you're gonna turn on YouTube and you're gonna watch the Independent Investor channel and you're gonna get some magic stock pick and you're gonna invest in it in the market and it's gonna go up 50%. Guys, I've been investing way too long. I don't talk along those delusional lines. I don't, okay? I'm looking to set you guys up long term. An allotment is something that you have to pick up right away as being something that you're going to have to do. What does allotment mean? It means that you're going to have to set this up to actually throw a little bit of pay dirt on the pile every now and then, whether it be $25 a month, $50 a month, $100 if you're married and you've got a married couple with 2 spouses and you've doubled this amount, or you've got 2 accounts to fund. You really need to look at making an allotment, and it's an amazing tool when you start to look at the power of, you know, what it could mean year over year, decade over decade, when you don't just look at this as $1,000, when you use the power of the account that I recommend, and you recommend the account allocation and the power of just taking that nest egg, that initial $1,000, and allocating it and protecting that money going forward. Guys, I don't want you to invest in one stock and have it take a 50% downturn. You're gonna shut me off, you're never gonna watch me again, and quite frankly, that's poor financial advice to give anybody. It's really off base. Because if we're, you know, recommending single stock allocation without the protection of diversification, guys, you're gonna suffer some severe losses in those accounts, all right? And if you're in the wrong account, right, you've created a taxable event that you're not protected about an eventual turnback and a gain. And the stocks that I recommend on the Independent Investor channel are meant to allow you to go into a downturn and expect that at some point they're going to turn around and become profitable for you and get you back into the black, all right? So allotment is the identification for you to not only take this $1,000 and put it to sleep, it's to identify how we're going to add to that and build up, whether it be the cash amount in this account ready for maybe a market correction, so we're ready to deploy those funds and put those funds to work when we get a good market correction. But to be ready to take this allocation to the next level, okay? With $1,000, guys, you're not going to be able to cover single stock diversification along a broad spectrum. You're just not going to be able to do it. You're not going to be able to cover all the major sectors that I talk about: energy, consumer discretionary, staples, utilities, financials, technology. You're really not going to be able to purchase really that much stock to justify those positions initially. But this allotment that you make is going to build up over time, guys, and you're going to be really, really surprised how this is working through the correct account. It's allocated across the broad S&P index, and then the allotment is really adding to building those accounts over time, guys. So listen, I hope you enjoyed the Independent Investors channel twist on how to invest $1,000. Please, if you have not subscribed to the channel, hit the subscribe button for me to support the channel and support future videos that I'm making coming out. I do this message for you guys. Hit the thumbs up button. If there's somebody out there that's thinking about getting into investing and doesn't know a lot about the investment world, guys, that I do a lot to break down investing terms and just talk about investing principles, guys. I do everything that I talk about. I'm an avid investor, and I do everything that I talk about in my videos. I just don't talk about it to sell content. And I appreciate you guys tuning in, and listen, good luck in your investment futures.